Stocks swing between gains and losses ahead of the budget and the U.S. Federal Reserve meeting. Utilities and energy stocks take a beating led by the Adani counters, while IT shows some resilience. Adani Group CFO tells CNBC-TV18 he is confident of the fixed price offer of Adani Enterprises sailing through on the stated terms on the back of institutional investor interest. And Bajaj Finance perks up on reporting strong growth in credit, healthy asset quality and margins, while an all-round beat of expectations by NTPC charges up the stock. Data Patterns leaps after sales and profit more than double, but BEL slides on a sharp dip in margin. Hi guys, good afternoon and welcome to Business Lunch. I'm Pavitra Parekh. Those are all of the top headlines that we're tracking for you this afternoon. There's lots to talk about, but a quick look at the markets before we really talk about all of the individual stories. We're once again seeing a slide to near the day's low. There you have it on your screen. Almost 100 points gone on the Nifty right now, and this is after we saw that initial recovery after the opening low. So right now it's looking quite weak and a bunch of the pain coming through from the Nifty bank. So that in itself is down over 500 points, 530 points to be precise, gone on the Nifty bank. So that looking extremely weak. Even on the frontline index, it is a cut of almost 0.7%. So this is shaping out to be quite a weak day. What's holding up, I do want to mention that a few of the Adani stocks that, have been seeing sharp cuts, the likes of Adani Ports and Enterprises from the larger names are seeing better gains today. So Adani Enterprises up 2.3%. Adani Ports once again has seen a slide in the past few minutes, but that was holding in a green for a better part of the day. But a lot of the other names, so the likes of Wilmar, Green, Transmission, you can see still locked in lower circuits. So that's what's going on with the Adani Group. But today, like I was telling you, a bulk of the pain coming through from the banks. So the larger ones will be on your screen, and these are the kinds of cuts that you're seeing. IndusInd is down over 4%. That is the kind of pain in the banking pack. You also have metals which are seeing sharp cuts. So everything from Hindalco, JSW, Tata Steel. I'm naming only the larger names, but pretty much all of them are in the red. What's holding up once again on this weekday is a few of the IT names. So those ones doing well, and the Bajaj twins also holding up well. Of course, we did have Bajaj Finserv just post its earnings, but both of them doing quite well on the back of Q3 earnings. That's what's going on with the market action. We'll come back to this. It is the big talking point, but let's now talk about the big corporate story that we have been mentioning to you. We did speak with the Adani management earlier today on a whole host of issues, including the current FPO, the Hindenburg report, the debt picture, and lots more. So listen in to what Jogishinder Singh, Group CFO of Adani Enterprises, had to tell us.
We are confident that on the institutional side, that the entire issue is from based on our discussion, roadshow meetings, etc., will be fully subscribed, and that's why we clarified the rumors were going on. So we clarified on Saturday night that that the FPO will proceed on current pricing and on the current timelines. So we are supremely confident that from an institutional perspective, we are there, but there will be some pullback in the retail given such decision pricing differential and the volatility. FPO will go ahead on the same conditions that we launched. Gross aggregate debt position in the group is just about 30 billion, of which $4 billion we hold in cash, approximately. Just under $4 billion we hold in cash. Because the way the domestic bank is, there was some sanction limit. So if I just go that on a sanction basis, it will be about 9 billion. The first thing is that 0% of Ambuja shares are pledged. What happens is that under SEBI's regulation, SEBI just has a heavier regulation, which is a good regulation, which is simply that please report encumbrance. So if we say that we will hold 63%, under SEBI strict reading of it is considered encumbrance.
Right, that is the Adani Enterprises CFO, Mr. Jogishinder Singh, clarifying on a whole host of issues. But what's really going on right now is the FPO, which is open, and this has actually been subscribed 0.02 times in total. So the NII subscription has come in at about 0.01 times. The retail and employee subscription figures stood at 0.03 times and 0.08 times respectively. Of course, this is still, open, so we will keep bringing you details on what's happening with the subscription. But speaking of Adani, Vivek is also here to bring us an analysis on what the MSCI impact of this could really look like. So, Vivek?
Well, absolutely right. So another important angle to look at this entire volatility as far as the share prices are concerned is the angle that a lot of these stocks are actually on the MSCI indices, and how is it that MSCI will treat these stocks within the MSCI Global Standard Index. So what MSCI has said is that they will decide on the treatment of Adani stocks in indices after receiving feedback as well as consultation from various members. Why is this important? All of the Adani Group stocks, barring Adani Wilmar, which is a recent listing, are actually in the MSCI Global Standard Index. And as of Friday, if you're looking at the stock price as of Friday, $3.5 billion, the kind of actual impact that could happen in case there is a deletion from these indices. So total 5.75% weightage as far as the cumulative group stocks are concerned. So Nuvama has come out with a scenario analysis on what exactly that MSCI could do after this particular consultation. So the first scenario is that in case the price volatility ceases, no action will be taken, so the stocks will continue to remain part of the index. The second scenario is that the volatility continues. In that case, MSCI can exclude the stocks with a prior announcement. The scenario 3 is an interesting one. It's happened earlier in the case of Piramal Pharma. The index provider could intend to actually exclude the stock, but some of the funds that are tracking the index will not be able to sell the stocks because some of the stocks, like in today's case, are trading at a lower circuit. In that case, there could be a delay as far as this particular exclusion is concerned. Index provider could also delete specific stocks at zero value. Not too much of a past precedence in that particular case. Lastly, the fourth scenario that Nuvama is saying is that the index provider can reduce the weightage of Adani Group stocks by half. In that case, a cumulative outflow of a little over $1.5 billion is something that we could witness on these stocks.
All right, Vivek, thanks a lot for getting us all of that. And like Vivek was pointing out, this is an important angle for us to look at as well, right? So we also asked the Adani management on what they think of this and on how really MSCI could act in this, in this situation. So let's listen into what they think of this entire situation.
This has been actually a very malicious, timed, deliberate misrepresentations put out specifically to sabotage the FPO. We were asked 88 questions. We answered all of them. 68 of those questions were subject to no research or any 2-year period. Somebody could have picked it up in one day because they are our own disclosure.
All right, so that is on the MSCI angle, but sticking with Adani, LIC also has significant holding in almost all Adani Group companies. So Yash has brought us some details on what the impact of this could be and, the entire Adani stock price movement could be on LIC. Yash?
So, Pavitra, as you correctly pointed out, the largest life insurance company, LIC, had holding of about 76,000 crore as far as Adani Group stocks is concerned. On Friday, we had reported that on a mark-to-market intraday basis, that value had lost by about 16,266 crore rupees. Now, we've been speaking to LIC and we've got a lot of questions, people asking what was the gain, what was the purchase price of these stocks. What we've been given to understand from our sources in LIC is that the total exposure of LIC as on Friday closing stood at 56,000 crore rupees in all Adani Group companies. Out of the 56,000 crore rupees which I mentioned, the mark-to-market gain as on Friday for LIC was about 25,000 crore rupees. So almost about 100% mark-to-market gain was something that LIC was sitting on. That was as on Friday. As far as Adani's bond exposure is concerned, that was also an important aspect. What we've been given to understand from our sources in LIC is that LIC has an exposure of approximately 6,000 crore rupees when it comes to Adani Group bonds. But at the same time, they have securities in the form of assets worth 7,500 crore rupees against that 6,000 crore rupees exposure in Adani Group stocks, in Adani Group bonds, I'm sorry. As far as the situation at LIC is concerned, what we've been given to understand is that LIC is closely monitoring the whole incident, the whole scenario, before taking any decision on its investment or profit booking in Adani Group stocks. We are also expecting an official statement from LIC on its investments in both equity and the bonds on the Adani Group companies.
All right, we will wait by for that important statement. But Yash, in the meantime, thanks a lot for filling us in with all of these details on what LIC's exposure really looks like to the Adani Group companies. We'll have to get into a short break now. But as we do that, here's some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. So catch the most influential, credible and powerful IBLA jury on the 8th of February right here only on CNBC-TV18. Hey guys, welcome back. You're still tuned into Business Lunch, and as we count down to the union budget, the government has called for an all-party meeting ahead of the budget session of the parliament, which starts tomorrow. So the meeting of the all-party floor leaders is currently underway in the parliament. The opposition parties have chalked out their strategy to corner the government. They are expected to raise matters of concern during the meeting and also highlight issues that they plan to raise during the session. Remember, this union budget will be the last final full-year budget under Prime Minister Narendra Modi's government before the 2024 general election. So it is important in that regard as well. This is the latest on the all-party meeting, which is currently underway in the parliament. But that said, let's move on and bring you some more ahead of the budget. As the plastic processing industry limps back after being hit by the pandemic, rising raw material costs as well as falling demand, all hopes are pinned on the upcoming union budget. So Shilpa, my colleague, reports from Dadra and Silvassa that measures to boost local manufacturing and making exports competitive really topped the industry's wish list this year. So let's take a look at the special.
Vivek Daga, director at Sarvottam Polymers in Dadra, says he has never seen demand fall like it has this year. His plastic company, which makes plastic items and packaging materials for companies such as D-Mart, Godrej Consumer, Plum, says orders, especially for household items, have fallen significantly in the past year, forcing them to run at just 40 to 60% capacity. A ban on single-use plastic has only made matters worse.
I am in the industry since last 12 years, but I didn't find the demand is dropped like this. This year demand is very much low. Maybe because of COVID and maybe because of our economy in domestic market, demand is very low, and also in a household categories. Because of this ban on single plastic, there is an increase of near about 12 to 15% in our packing.
Adding to rising costs and low demand, an influx of cheap imports from countries like China is also hurting the domestic market. The industry says increasing the import duty on value-added products to at least 20% will help boost local manufacturing.
Once the custom duty on these finished products are taken above, the manufacturing sector will grow in our country. The import duty on the polymer, what people like us, we are paying now, we are not competent enough with the local material. If the duty is decreased, maybe there is a good scope for the converters. They can be properly competitive.
Exports of plastics too have slipped amid tough macroeconomic conditions. According to data from the Plastic Export Promotion Council, exports of plastic in the April to November 2022 period fell 6.7% year-on-year to $8,178 million.
Demand from US, Europe and other countries has gone down significantly. There were other issues also related to this, like shipping cost. The shipping cost had gone up very high, so their imports were very expensive for them. Further also there was logistics issues. The product became uncompetitive to buy from India. In those periods when there was a very big slump in the international market, or you can say as a God-gifted thing, Indian demand picked up.
To boost exports, the industry hopes the government will reduce import duty on their key raw material polymer to help make exports of value-added products from India more competitive.
Our main demand will be to see that we get our incentives for export, which we were getting earlier. In the last few years, we were getting some money, approximately 6%, 3%, 4%. But this year, since last year onwards, this has become nil, zero. And that was a very good cushion to fight against China and other Asian countries for exports.
Other expectations also include support in reducing logistics costs, subsidies, and a lower threshold for the production-linked incentive scheme.
Solar and renewable energy is being seen as the next big opportunity for plastic processors to be able to make parts and components for solar panels and windmills. To that effect, the industry is hoping that the government offers some incentives like higher import duties on components like EVA and backsheet to promote local manufacturing, which would be a big opportunity for plastic processors at a time where demand from other sectors is still limping back up. With camera person Ajay Dabolkar in Dadra, Shilpa Ranipeta.
All right, that is the wish list from the plastic makers industry. So let's see how much of this actually does come through in the budget. But with that, we are going to bring you our CNBC-TV18 budget quiz. Remember, there are prizes to be won every single day. And we gave you the question at 9:14 a.m. today. But in case you missed it, here is today's question once again. What percentage of the expenditure in budget FY23 was allocated to the defense sector? And your options are A 7%, B 7.4%, C 8%, and D 8.7%. Send us your answers on Twitter. You can post your answer as a comment on the question tweet by CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Hurry and send us all of your answers. We will be announcing the winner today at 3 p.m. Welcome back. You're still tuned into Business Lunch, and let me now bring you the latest on the controversial BBC documentary on the Gujarat riots. A plea has been moved in the Supreme Court against the exercise of power under IT rules to restrict the viewing of the documentary. Additionally, I do want to mention that the plea also raises concerns over students being suspended for viewing the documentary. And furthermore, it claims that tweets made in support of the documentary were redacted by Twitter following the government's order. So based on all of this, the Supreme Court has agreed to list the case for hearing. We will, of course, tell you how this proceeds and bring you, the highlights of the hearing. But with that, we are going to wind down on this edition of Business Lunch on a very positive note, because we do see some good cheer coming in from the ICC Under-19 Women's Cricket World Cup. Team India has made history by defeating England with 7 wickets in an extraordinary final at the inaugural tournament. Shefali Verma's team sent England to bat after winning the toss and bowled them out for a meager 68 runs. Accolades for the young women poured in from all corners, with BCCI announcing a ₹5 crore cash prize for the team, as well as the support staff after this historic win.